Hey guys, how are you? Yep, a quick update from me on a difficult day for crypto. Yep, we'll come into that in a minute. Um, Crypto Sniper was blocked by Plan B. I wasn't quite sure how or why that happened actually. I don't tend to get blocked. I leave people alone. But I got a bit of a clue. I was clicked on a link because I was interested in the stock to flow, and it said you may not see from my Crypto Sniper profile. And I thought that's very strange. I've actually only copied him once before. We both were positively referenced in a Raoul Pal Real Vision video that was behind paywall, so you won't have seen it. Uh, Raoul just explaining how he's interested in the stock to flow model and how he gets guidance on that. I was referring to some of our technical stuff on the charting side and building his exponential view. And this was being shared, as I say, behind Real Vision. And I said, nice to be referenced by Raoul and Real Vision. And I copied him in, also referenced. And I think I said something positive about Solano or something in it. And I think that might have seen the reason, because I don't actually know too much about this gentleman apart from he's done a lot of work on the stock to flow model. And many of you will know him, got a significantly larger following, 1.5 million followers. He seems spot on most things. $100 trillion. That was, of course, the Zimbabwean dollars, not USD. Absolutely worthless piece of paper. He seems anti-vax, which is very good with me. He has scammer problems, probably on a significantly larger scale, people mimicking him. So yeah, we seem to have a lot in common. But I think I found the one key thing, and we're going to talk about this tweet and his stock to flow model. But first, just to handle the blocking, because I don't spam. I get people ask, why do you copy Raoul in? I've appeared 3 times on his show. I've had an email contact with him. I enjoy what they do. And if I see something important, I notify him. So people, why are you copying him in? Like it's some guerrilla marketing spam. Believe you me, if someone says, please don't refer to me again in any communications, I'm the first to stop. And I'm really in a position where I've pushed them that far that they even get to that point. But thanks for the concern. Anyway, I'm sure everyone is happy. Now, what I see in his feed that he doesn't like, and there's his model, is over here. Please do not reply or comment with info on other coins or tokens. I think I referred to Solano having a good future ahead. I consider that noise. I block people who do that. Do not ask me to do stock to flow on other coins. There is no shitcoin stock to flow price relation. Also, do not at me in giveaways and airdrops. I also hate that. I block people that do that are leveraging your following, but I'm just probably significantly less hassled by it than him. So actually, we're talking about a Bitcoin maxi. So anybody who mentions anything about any other token. And that's a problem for me in terms of mentality, I think. But I'm glad I know now. I didn't know sufficiently. There is only one solution. It's like the one internet company. It's like the one retail store. You should all buy from Costco. It's the uni-mono thinking, and it's highly, highly prevalent. Of course, Raoul isn't like that, and I doubt he's blocked. But when you run a significant media company of great scale and reach, it's quite probable that's a more pragmatic decision on our friend over here. But let's talk about the stock to flow. This is a model. And by the way, I understand very little about it, but I want to talk about one key thing that is missing. And he's called for these various other numbers to occur. And I don't know if it has the rounding, expert curving, the sort of convexity where you cease to go as exponential as you get more mature. I'm sure there's some element of that, but it sounds more based on the supply from what I can gather. And I'm far from an expert, but it has been lagging. And as a result, he made some big month-to-month calls. And I think that that's a mistake because there's a couple of reasons. You may at the macro level in the mean be accurate, but it's very hard to be month to month. And Bitcoin apparently needs to be at 98K by the end of this month, which is in 8 days, which given that it's chucking it down doesn't seem too likely. But here's the issue with all of this great deep dive analysis that is strictly Bitcoin focused. Not only are you talking about a maxi, that Bitcoin is the only solution, it will be the fastest, the best, it should be, everything should be done on Bitcoin, everything else is a fraud, a lie, or insufficient, or unsafe, or even though Bitcoin would have been running on one server and a laptop at the very beginning. Nonetheless, despite those beginnings, they are the boss on everything. And actually, I'm very glad there's Bitcoin. I'm very glad Bitcoin's about, and I'm not negative Bitcoin per se, but the likelihood that it's going to be the idealized solution for all things, I think, is foolhardy. That's point number one. Point number two, when you're making price-based predictions, you are living in a Bitcoin-only bubble, doing analysis only on Bitcoin, and yet the chart is Bitcoin USD. Yes, ladies and gentlemen, this is the dollar index that I am showing you. The dollar index, which is against the euro. And we've also given you the entire framing for this. In fact, I've even underweighted my own research, as you'll want to do. The mechanics car gets the last look, etc. We have been calling and warning that there's going to be a macro on our other channel, which I don't know if he's blocked as well. I haven't copied him in, so I think it's fine. The Market Sniper, where we talk FX and commodities and traditional markets. People in the crypto world think they are participating in this unique bubble that has no real world repercussions, and that those same institutions that are wading into Bitcoin do not also have FX books, treasury departments for mega corporations, and all these other things that are far larger dominated than their small allocation that they put to crypto, albeit billions, with foreign exchange markets, debt, interest rates, gold and silver. And here's my issue. When you live in a bubble, everything is about your little bubble, and you think it's totally inflated, deflated, and that there's very little else it has. And the tweet here, fear is back, Mount Gox related. And of course, if you're tweeting a news agency, I call it toe tagging. News agencies give you the reason why things are down. It's Mount Gox related. No, it isn't. It's dollar related. It's dollar related. But you do know dollar research. You're only talking about Bitcoin. You're only modeling on Bitcoin, and everything in the world is only about Bitcoin in your little bubble. It's like you're a child playing in your toy room and you've got a little red truck, and that's all you can see or play with. The point is, there's much bigger things going out. The window banged, not because of your little red truck being unhappy, because the wind was blowing outside. And that's what's happening at the moment. We actually have an incredibly strong dollar environment. Now, how we framed the world in terms of, and we'll leave that tweet and Mr. Plan B. It's not my intention to negatively reflect on him. I think he's done probably quite amazing research, and it's way beyond my ability to understand, although I haven't done a deep dive on that point. And I have looked at it, and occasionally it's been a point of interest as a kind of on-chain analysis item, even though it's not really even on-chain. It kind of is. It's a supply issue. What I feel is, he's not under, I don't know if his model is catering for the fact that there's going to be much longer cycles. And as a result, it's not going to be plain upside. What you had in previous cycles is not necessarily going to happen. We're flattening, we're going to get more pushback. Another key point is this dollar point. Everything is done is not understanding, in my worldview, the fact that the God market is fiat. The biggest market by scale is fiat. Crypto, at a couple of trillion, is a whipper-snapping little Maltese poodle that's yapping its head off at a great 8-foot Dane that could, in a bad moment, snap its jaws, and the only way it'll get killed is the dog getting stuck in its throat. In terms of where it is now. Now, I know that, in my worldview, we will be replacing many things with blockchain and crypto, but it's being scaled up, and it is still small. And the city bankers, the Forex desks, the dealers, where hundreds of billions are moved, and in Euro USD, it's guesstimated, although it can't be known, approximately 4 trillion trades a day. That doesn't We don't even know what derivative market scale is, but we know it's absolutely vast. This move here in the dollar is highly, highly significant, not just for other currencies, which it's busy killing, ergo the euro USD. And as I've stated, I've underestimated it. I still had some leverage longs. I was expecting the alt market to go strong, but I was a bit concerned for Bitcoin, and it's turned and it's sold off pretty ugly. And the reason for me is this. And how do I know that? It's called 360-degree analysis and not being stuck in your little bubble. It's called, silver and gold. And guess what silver and gold did? As the oil, the dollar market is in I thought it was going to pull back and have a little bit of a rest. Two huge candles here on the daily. Friday, and then a reassertment. This is a really strong move. You've gone from 93 to 96.4. Now on crypto people, they don't understand the scale of that. They'll go, what's that? That's 3 units on a 93 unit. That's barely 4%. We do that in a day. No, you don't when you're a quadrillion big market. No, you don't. And what happens in the quadrillion big market is far more important. The massive dam upriver with that dam wall bursting is far more important than you pulling the plug in your little bath. And as a result, this move is the reassertment of the God market of fiats, which is the dollar. The dollar is the God market of fiats, and will be in my opinion, the last to fall. I call it the tallest tower behind the village walls, and many of the peripheral outside the village walls and the moderately sized ones just inside will all fail inwards, and that is going to drive the dollar even higher. As part of, and we did on our Market Sniper channel a Brent Johnson interview, and you should watch that for understanding that. And to say it's Mt. Gox, you're echoing a Rothschild's Reuters magazine that is doing what I call toe tagging. Toe tagging is the process where when something's not performing, you have to provide a reason. It's like a dead body in the street. That's a problem. If there's a dead body, half buck naked, lying in the street. The minute the ambulance comes, loads him up, the next of kin are notified, and a name is put on the toe, and the reason for death, hit by a car, a drunk vagrant of 30 years standing. The story's completed, everybody understands, because everyone's in fear. It could have been me. How did he die? He was a vagrant of 30 years. Oh, that's okay. I don't drink. I'm not a vagrant. I'm a successful person. And he was wandering in the street and it was a hit and run. Okay, and he was knocked out cold. Okay, there's no murderer out there. We all toe tagged and we carry on. Tough for the vagrants. We're good. The reason has been provided. The toe tag has been slipped on. And media is there to create fear in the case of the vaccine, and he and I seem pretty aligned on that fact, but also to give verification and justification and to speculate on the reasons for things. If it is Mt. Gox that crashed Bitcoin right now, let's have a look at that. That sell-off right there, let me get a chart that's a little less busy. That sell-off right there, oh, it's all the Mt. Gox, the closest narrative of it all. Why did gold and silver at the exact same time dunk? Is that Mt. Gox too? Does the Mt. Gox Bitcoin situation have any bearing on mining, supply, or any of these points? There's your gold sell-off. It actually started this morning. I was talking to the community and I almost called a buy on silver. And in fact, I was going, yeah, I want to buy silver. Silver as well selling off, but it sold off less so. And we are looking at this and we're seeing, okay, we're getting a potential structure for downside. And I don't want to stray too much into other markets. This is for Crypto Sniper, but this is the understanding of 360-degree analysis, macro market understandings across various other things, other fields, areas, and industries, and not existing where your news provider, Reuters, gives you the reason for why Bitcoin sold off. They are guessing, speculating. They don't know any more than you. They are providing a toe tag for John Doe, whether his name is John or his surname is Doe, to get his toe tag on so that the body can be carted off and put in the ground and everyone can crack on as usual. It's all fine. It won't be me. I'm not a vagrant. I don't drink like that. In actual fact, we're expecting this to come down. And during this morning, we saw this sell-off and then the subsequent rally. And we're expecting a head and shoulder structure, which means longer run Gold and silver ratio probably down, and the precious metals again up. But we've been set back here. We've been set back on the precious metals in both instances. Silver less so, which is rare, which is an underlyingly bullish bearish event, if that makes any form of sense to you, because gold has wet the bed a little harder, and that's saying silver is a tighter supplied market. So we stand by our silver bull calls. We're still bullish platinum, but this is quite a correction that is occurring. And how's it this all coincides? 16th of November, stand me too. Let me split this with you. This is platinum market. And I don't even know what I'm going to see here. I'm doing it live for you right now, and we will do it for gold as well. Here we go. This is daily. Let's get it on daily. Boom, chakalak. As the gold, as the dollar market is getting stronger, we are seeing weakness in the metals for a bit. Why? Because the inflation narrative was getting too powerful, the Fed looking too stupid. You actually had during this period an upside drift. Remember, these things aren't going to happen at the same, a slight upside drift on the dollar index, but during that period you still were going up in platinum because they're undervalued. Then you started to go parabolic from this point on. From this point on your platinum market, you started to go up very, very strongly. How did that work out for the metal? Exactly like you're seeing. In actual fact, it's standing still in stronger dollars. That's what's actually happening. It's standing still, probably on small move on much higher rating. And the way you can do this is you have a look at the Euro USD. How's it doing? Now, the fiat, the God market of fiat is the dollar. So if you have a strong dollar, it is -4. The euro, which is the second biggest fiat, generally commodities, it's bearish for. Generally precious metals, which are commodities but a specific segment they're in. And generally Bitcoin, if you're not in a supremely dominant overall crypto environment, which for now we are actually not. We are in mild bullishness and slight corrective phase to the downside at this moment. And this is what, as I say, people that are entirely crypto-centric with stock to flow models and other tools that they put a lot of smart thinking in, but are incomplete because they don't understand the macro environment around them, and what's going on in the fiat world is intrinsically relevant to crypto. And those same institutions that are the new participants are engaged. And engaged in the FX markets, as well as in a very small percentage of their overall asset class. Let me tell you in terms of how much they've allocated, and it's still huge money and they're the biggest players. It'll be micro percentages in terms of their exposure to equities, bond market, and FX cross pairs and derivative tools across all of those. And international and FX emerging holdings and FX emerging equities, and you name it. So crypto is going to be a small segment of their pie, yet they are the big bulls now, the big dominant whales in this market. I want to take you to another topic, because this is an important thing of understanding generally. And that is our the failures or the points that people will not understand around our Hunt Bitcoin commitment of traders manipulated indicator. So let's do that. Let's have a look at Bitcoin and put up that indicator, and I want to show you a couple of things. So this was our contribution, if you want to call it our version of stock to flow, in that we said, here it is guys, go and use it, go and play with us, is the following. I'm going to put it on weekly because you essentially get weekly data, and I'm going to remind you that actually we're going to take it, but Binance doesn't have enough history, so we'll take Finex and we'll add it in. So if you're looking for this and you haven't already got it, there's three components. The amplifier, which I'm going to leave out, that gives you a super part to whether it's a super short or a super long, and that takes in a volatility component. The actual signal, the insider, that's it, and then the signal where it shows up on the chart. So click on those two. If you search Hunt Bitcoin and then CoT if you like, you will find it. By the way, these are here to explain stuff to you. Once you've read them, you can make them go away once you understand. Typically, I say the 2-day minimum but in this instance, I prefer in best view week. You should, because the data comes out weekly, you should have a look at it at a weekly basis. So if you do that and you have a look at this, guys have been getting super excited because the Bitcoin CoT indicator has triggered many times now. There's something important I need you to know, and that is, you can call it if you want a failing. I don't see it as a failing, but in terms of interpretation, people will over-represent that for a lack of understanding of what this indicator does. So let's handle that. We had super low volatility during this period. That's why that was a super long. It was an excellent call. You got 2 successive shorts. That was an excellent call as well. It got you out the localized high. You had a candlestick shooting star there. Very, very classic. You got a small long there that caught you on the up move from in and around 6s to 7s that got you out in and around 10s. There was a caution before the short. 4 bearish signals, all accurate. These were all both part of this. Remember, this is more an investment tool. It's not to the minute. You only get a data point once every week. You got the long call in the second week after a major capitulation, and then after the squeeze here. You then got the don't panic, accumulate into the falling wedge call. Now, this is where something has happened that didn't exist in our short history when we created this indicator. And that's the following. And this, I also bring, reference the discussion of surrounding Plan B. Why I will say it's not necessarily everything is in that market in terms of how he handles it. What has happened recently is that we've had typically throughout this mature period, once the crypto commodity market settled, the CoT, which comes from the futures market, settled down. In the beginning, it needed a bit of settle down, light volume, not much going on. From here, once it began to settle down, we had consistently a much higher of the top 4 largest sellers, a much higher amount. So the red line has always been higher. You see the red line? It's always been higher. The top 4 largest sellers, mostly would be miners. Remember, this is still a proliferate product. Just the degree that it's being proliferated in terms of new supply is diminishing at each halvening point. The 4 largest buyers, the rest of the buyers that aren't in those 4 are retail, you and me. The 4 largest, almost certainly institutions, hedge funds, home offices, and many of the ones that aren't in the top 4 also will be large but not in the top 4, have been some way behind the top sellers. The gap of what is being proliferated is being made up by the retail market as a whole. So if you look at those 2 lines and try to focus, I'm going to take my scribble off just to ignore the blue line for now. I'll even make it go away and make it white, shall I? So that you can just see clarity. And I'm going to make it bigger as well. Instead of blue, let's take the delta off. Make this bigger. So we're correcting a misunderstanding, potential misconception. I'm seeing some Twitter interactions. First of all, overall, this has given a macro bull signal. We have the largest 2.5-year continuation pattern. Again, the stock to flow model doesn't capture that. It's dealing with different aspects. That is why we had such a single-minded, awesome run from in and around these triggering event levels of 9K to 64. And I said, this is going to be your easiest run. And I want to, at a similar time, let's just take the mark point there, July, roughly July. You can say it had a little bit of a pullback. It could be September into the March, April's highs. You already started showing fatigue here. So we just go to February from July and September. Okay. I want to show you something of what the dollar index was doing last year. We go weekly. That's on the inverted scale. I don't want to do that. It'll confuse the hell out of you. What was the dollar doing? And this is why we said to you, this is one of your best runs that you're going to get. That's a monthly time frame. That's our expectations for the dollar index. So join me and seeing where roughly from July over here, watch where I'm illustrating, and this is what these guys don't understand. You had the largest 2.5-year continuation pattern setup. And these setups occur when you get idealized conditions, not only in your market, Bitcoin, but the other half of the market, that is the USD, United States dollar. And what was occurring during that 2.5 continuation pattern? You were initially setting up and not breaking out and having that July, the previous year, 13K run where you pull back. Because you had the lid being kept on you with an ever increasing dollar, you had a falling wedge there and you had a pump. Then the pandemic occurred. You have these spiker-mentals, all of that. Bitcoin dumped to sub 4K on certain areas. That was a dollar strength event. People got out of Bitcoin into, guess what? Fiat. And go have a look at how much other nations are trading in their home currency or the dollar. The euro Bitcoin volume compared to the USD or dollar stable coin, all of them, Tether, USDC, USDB, or you name them all. Go and have a look. They're all dollar, whether they're a stablecoin dollar versus what trades on the euro. It's a pittance, and that's the next biggest. You can do it for the Korean won, the yen, and anywhere else. Everybody gets out into the dollar. That's a fact, or a dollar-based stablecoin. That pumpermentals on the dollar from there, this was absolutely huge. It took an unbelievable event where they were killing the economy. Spiker-mental to 103 over there, and that was from a dip before at 94.5. Brought Bitcoin, remember, from when we gave you the super sell with the commitment of traders indicator in it. There. Wipe the face. There she blows. 2 shorts before a pandemic. You're talking about an indicator that actually called a pandemic inadvertently with a bit of wiggle room, essentially called an event. And we saw it in the biggest buyers versus the biggest sellers. We went to our broadest. So our signals are generated by a squeeze when the sellers that are normally higher have come down lower and they're not distributing. That is part of a supply equation. In some senses, we're dealing with the same concepts. And as I've already said, I don't fully understand the stock to flow model. I'm not going to pretend to, but it's supply based. You will have a clear lack of supply or a reduction in supply coming down from a previous short that gave you your long. So the pinch here is your long. Then you had a major expansion in supply. How did these people know? Don't ask me. I have my own opinions. That's for Reset Sniper. You had a major increase right the way through our triggering short level. Simultaneously, the buyers were retreating from that level to there. You got a caution and then a short sell. And then you got out yourself at 10.5K and you bought back at 4.5. Tell me that ain't valuable. I don't know what any other, and I'm not taking a pop at anybody here, what any other, never mind stock to flow, any other indicator ever gave you that. And that is why it's valuable. But it is in now, since the breakout, the triggering event here, your return move, and then this was your best period. That was a reasonable pullback, but this was your best run period. That was your first cup gold nugget 2 target. Everything else became, okay, you're in overperformance zone. It's no longer plain sailing anymore. You go a little bit up, you go a little bit down. You had the dollar playing the game you needed it to play. This had been kept down because of dollar strength. You had the perfect circumstances after a blow-off strength in the dollar, where you then had a sustained period of dollar weakness, and that gave you your key point of a first cup gold nugget triangle continuation HVF macro. And that's why you got such single-minded, easy peasy moves. Look at this chart up to there, particularly here, barely a red candle, a bit of a spinning tops. You had 2 reds there. You had already made our target by the time you'd done that. You actually had 1, 2, 3, 4, 5, 6, 7. I'm going to call that neutral. 8, neutral, 9, 10, 11 green candles in a row. That was your halo run. You just had to shut up, be mildly leveraged if you had the balls for that, otherwise hodl, and be net long. That was easy peasy, Japanesey. And now you came into much more interesting time where in a period of overperformance, we've had a marginally higher high. And what's now happened? And the key point that all these people with their fancy models and everybody else with indicators, and myself included in that, have not taken in sufficiently into account is that you have a dollar-based event as well. And here's your dollar-based event. You participated in the first cup gold nugget from just before July into September, and you got, February, right out here, my apologies, it was February. That was your idealized run. Let's draw it again, and that captured this period there. And what happened to the dollar? Well, do allow me to show you. That's what happened to the dollar. That's what happened to the dollar. That's what set up your 2.5 year structure. Because when it wanted to go, it was fighting dollar strength. So it got held in the continuation pattern until you had a dollar event. That saw a blow off, and then the dollar weakness coming in. 7 trillion created. So not only fundamentally was it significant, it was technically significant because the one is the other side of the same goddamn coin. They were proliferating, they were weakening the God market of fear. It's far less important if the euro is proliferating. This is where Brent Johnson is right. Forget the morals and who's wrong and dollar to zero and getting in a big ass fight about all that. What you need to appreciate is that the dollar is king fiat. This is a bit loud, sorry guys, if I was blasting your head off. So I've turned it down, the capture. So now you're wanting your end of year pump into A, the cycle has lengthened. B, it takes way more money to pump a 2.5 trillion market than it did 800 billion market. What were we last year in 2017 total? We couldn't make $1 trillion on all tokens, including Bitcoin. So now you're talking 2.5, 3 trillion. What is the total market cap? Let's go and confirm it. I don't want to be too out of date, even as it stands now. Full total market cap, 2.5. And it made 3. You had a 3 trillion market cap. It's a lot bigger than 800 billion to pumpermentals. And now you've got competition in that there is panic in currency markets. We've called the USD Korean one, the Euro USD short, the Euro Swiss franc short, the USD Japanese yen long, in other words, long the dollar. We are seeing a secular macro bull running into the dollar. We're seeing this whole dollar index going right up to well north of 99 as first stage of a long-standing run that is going to be news headlines, and we're giving you the news before the news for ages. This draw I drew then. That's why the line started there, and I haven't changed it since. And it wasn't perfect, but it's good enough. And we've shared this to anyone who will listen. And we are the Cassandras of the FX market. I don't work for a big hedge fund. I never want to manage anybody else's money. I'm quite happy managing my own. But we are the great Cassandras because we have said that. We've said Brent Johnson, when everyone was mocking him, is actually in principle structure right. He's just not a technical analyst. And that I suspect in time he will be proven right. And it could dip down and come around. It ended up dipping down much worse and deeper. We were saying, look, we might be wrong here. Whoop, double bottom. You ended up with the inverted head and shoulders in the same way as you have the head and shoulders on the euro. Put the lamp back on for you. You can see it. There's going to be all kinds of annotations, but you can see it in there. And boom, now we are going strongly. And what is the target for this structure? We have 111 for when this does, but this inverted head and shoulders takes you back up to here, 99. Back up to pre-pandemic levels. You will have round tripped to the downside, and then you're going to break up to the upside. You are not going to get your $1 million Bitcoin by March, like so many were saying, Mr. McAfee and many others like him, may he rest in peace. You are flying into a headwind where when you ran from 10 grand over there to there, you had a dollar index absolutely tailwind, the strongest tailwind you could possibly get. And dollar doing bad is anti-fiat. That means you got lots of things that were strong. Mt. Gox did not crash the gold market. It did not crash the silver market. And it probably, if we go over to crude oil to see how that did today, it didn't bring down the Western Texas Intermediate for today. As you can see, there's been quite a correction in oil and energies. That, my friends, is that dollar index. And that is the key element about 360-degree analysis. And I've underweighted it because I still thought if Bitcoin plays the game, we could be getting some alts away. I was tweeting it, was talking it, looking at the one. I've made some great money on Elrond. It's been my best one. Sol, a teeny bit. The others, lagging. And then this started to happen today, down. We thought we'd get a rest today on the dollar. It took a small part rest. This is your warning. Those two candles there looked like a possible pullback and a rest, shooting star rest. Look what happened next. There is more to this. What is your euro doing? Which is kind of the seesaw, the guy on the other side of the seesaw. Dollar gets heavy on the left, euro gets pumped through the sky, vice versa, the other way around. And what did I say? And many people in crypto don't get this. The euro is falling through the floor. There are all sorts of issues going on there, but this is as much about the taper tantrum, the potential for even small interest rates. Remember, there is so much leverage in the system. People with insane leverage, and I shouldn't say people, corporations, institutions, that small ticks in percentage terms are rate of change significant. If you fund it at 0.25, something then goes up to 0.75. People say, so what? It's still sub 1. This is barely interest rates. If you funded a payment at 0.25 and now you're paying 0.75, you're paying 3 times what you were paying. This is huge. The rate of change, the percentage-based change, which is why when we put up the bond market, when we put up the end of the 40-year bond market call that we said was doorstepped, bookended by the final capitulation in yields, we said it's the end of the bond market. You only go up. They will lag going up, but they will still go micro up. They'll have to. They go up too fast, they won't be able to pay their debt. So you're going to have negative real interest rates there. But I can tell you the big easy money where people are piling into debt is done. That market has turned, and the only way they fix that is reset or a sustained period of negative interest rates so long and so devaluing that you just lose money in the bond markets. And that's the value of seeing everything 360 degree and not staying in your Bitcoin bubble. And Bitcoin is the only thing. Every other token is a shitcoin, and there's nothing else true in the world that you need to bear any form of significance about. And for me, this is a dollar trade. And we've said to our community, in our premium community, you should have FX longs on the dollar. And let me tell you, every day that my crypto hasn't done as well as I thought, my Euro USD short has done blindingly well. My Euro Swiss franc has done well. And my USD DKK, which is the Danish kroner, has done well. And that's the part of understanding macro. You are going to have a headwind on crypto. And most people, I remember seeing people that were still communicating with him. I won't say, also runs a channel involving the moon. I'm 99% my wealth crypto. And it sounds like a macho, bravado, all in. It's the poker chip guy that goes all in. That guy loses. In trading, the guy who goes all in loses. You need a stable of horses. And right now you need to understand the cycle. The cycle is dollar strength. That means you're short on the Euro USD is hedging what you're not making on Bitcoin while it's going down if you choose to hodl. That's a fact. Whether you want it or you don't want it. All the people 100% in and saying, I'm all in fastest horse, etc. I say stable of horses. This is a macro system. You are trading a reset of a macro system. How do you think you can trade one piece and it's always going to give you exactly what it gave you before? Models work until they stop working. That's how it works. It stops working. And sometimes I get a bit frustrated. You can be the best modeler in the world. You can have a seasonality that's 9 out of 10. And then 3 years in a row, it doesn't happen. Things change. Things shift. And how are you set to cover yourself for that? You should have an FX. We have below 100x European broker for trading USD pairs. And you can be long USD JPY. We gave this on free view on the Market Sniper channel. You can be long. And you go, I don't want to be an FX trader. That's fine. Die with Bitcoin in these headwinds of the dollar, or have something else that's hedged you and making you back what money your hodl is currently losing. You want to leverage trade in this market? It's going to be tough because Bitcoin is still a macro bull in an overperformance period, having many setbacks with many pullbacks that can often outlast you. You've had a 55% half-time orange. How really well are you going to do if we do 30% from that 69 top? Going back to Bitcoin. Come on, get me to the top. Going back to Bitcoin. This is a marginally higher high. Many of what I've been sharing technically are terrible retail trading structures for going up. Rising wedges are a nightmare. You're going to come down, you're going to come down. Every time you buy the new high, you buy in, you get dumped. Then you go and make the new high over the previous high. You go the new high, you get dumped. Those two dumps, not enough for you. A rising wedge there, you get a macro dump. Boom, you're at the bottom. This is what's happening. You've had a move, you're getting quite substantial corrections. What's happening? The more the move goes on, most people late. We were in long here. The best part of your move for Bitcoin and other cryptos as well was the first part. Be early. The best part of this move coming out of this falling wedge was the first part. This is a trader's nightmare, no matter how good a trader you are. I lose money in these periods. Abso-goddamn-lutely. Marginally higher highs. Rising wedges into marginally higher highs. Now we're going. This time it's for real. No Charlie Brown. Back you go. Okay, we're making wind up, squaring up. Okay, we're going to go for the new. No. Whoops, head and shoulders. Hell, we got to reverse. This is a whole head and shoulder. This was the best entry right here. Over here. For leverage. There and there on that falling wedge. And that gave you the boxes. You needed to be out of leverage at these points after that. That was the best entry there. There's your best move. It's a staring you in the face. Now you want to hodl? Well, yes. Long run, I think if you're really patient and you hodl, fine. But don't expect models that worked when the dollar didn't matter. You bring the institutional money, you bring the dollar mattering into the game. You bring the institutional money and you become a big playing field that's been taken seriously. You bring the bond market and interest rates into the game. When Bitcoin in 2010 was just released in 2011, how much did interest rates matter back then? Not a sausage. In 2012, not a sausage. Does your model deal with that? No, it doesn't. It doesn't deal that the constitution of the biggest holders has changed. You have brought institutions that are involved in many games and they bring with them all their baggage and all their concerns. And this is a play of Bitcoin dollar, and this is the pairing, and this is what people do not get. And this is why if you're on Crypto Sniper and following the Crypto Sniper, you should actually be following the Market Sniper. I continually reiterate that this dollar strength is going to be a problem, to the point that I'm even undertaking my own advice in this situation. And I keep going, yep, thank God I've got those FX trades. Thank God I've got the FX trades, because they are flying. They are flying. We've called a Euro Swiss franc failure. We called a failure of the Euro USD. We've called a dollar index to 99 for a major rest, and then 111, then potentially 115 and 120. Do you know what will happen? In percentage terms, they sound so small. That is huge. That is the failure of the FX system from the periphery into the middle, and the final spike super strength of the dollar, where everyone runs. Yes, there will be some money going into gold and silver on the sides when they all go up together, but initially it's a heck of a headwind, and that's what folks aren't getting, and we aren't there yet. This is why we're modeling the shoe dropping. This is why you need 360-degree analysis and recognize that models are good until they're not. And this is why you have to understand that this is a bigger game that involves a macro world, a failing system, a currency market, a debt market, and everything else. So I'm repeating myself. Bitcoin is in a tad bit of trouble. And to illustrate that, I will show you the inverted charts that I've also been doing. And it is in a little bit of trouble, and it's not allowing a lot of alts that wanted to run, in my opinion. And I felt if Bitcoin allows it, we should be okay. But you have a look at this and tell me. I'll finish with the CoT actually, because I didn't finish that. If you have a look at this with me over here, and we drop out of the weekly into the daily, what are we getting? This is a concern for me. We told you, accumulate here. This is that falling wedge after the head and shoulder. This is an inverted Bitcoin chart. An inverted Bitcoin chart. What are we actually getting here now? We're getting, Bitcoin has been worrying me a little bit, and this is why. We're getting that. Broadening structure after a bear pole. This dollar is affecting this commodity. This 60K is a key level that it seems to continually to react with. It was here, it was there, and it was there when you had your inverted left shoulder, your head, and right shoulder. You made that target exactly as we said. You should have bought back in on the break, and that was your best part of the move. You got back in on the rising wedge on the break. That was the best part of your move. And now what do? You're telling me this isn't bullish? This is bullish, bud. And that's bearish because you're on the inverted chart. This is bullish. So let's finish on the CoT failings. So the CoT failings, and I don't see them as out and out failings. I'm calling them that because you get some people that don't understand what we're doing. The CoT failings are, what's happened is that the four largest buyers have gained a bit of ground where they kind of were settling in and around 20%. They've come right up to 40 and 45%. And the four largest sellers are actually coming off. So supply and demand between the biggest four players on the sell side and the long side have now become very similar. They've become very similar. They are walking together. So that gives the impression you are in a perpetual pinch. So if we put the signal back on, the blue line, the delta, you will realize the problem this causes. Because at no time in the limited history we had available did we ever have a period where you didn't touch just for a short period and then you snapped away. So you come into a room, you buy the light switch, you switch it on, you come into your office, you work for a while, you go out and you switch it off. There's a distinct period coming in, working, going out. What's actually happened is you've now come into the room, you've stayed by the light switch and you switched it on and off, on and off, on and off. And the market doesn't know what to do. Why? Because the signal has stayed down. Why has it stayed down? It's the difference between these two lines, and you haven't got any separation. It's very finely balanced. The four largest buyers and sellers for the first time. So your initial signal was the key trigger of a bull signal. All these subsequent signals are because you still stayed below the level. It's not so much a new signal. It's the fact that you're still in the signaling zone. So it's the second and third switch time you're playing with a light switch. The first one is when you came into the room. The rest is you stuffing around and not really going to your desk and working with a light on. You're just, let's play with a switch. So it's difficult. It's trying to say, okay, you're working and then you're leaving the room. You need that departure. You need them to separate and conjoin again at a subsequent pace. That's not happening. So we got a signal treat. So that it keeps saying you're still in the signal zone. But the real signal was the first signal. The first signal is the event that they squeezed, that they came together and squeezed for the first time. That's your signal. Boom. Right there. Just like it was over there. This is just, hey, we haven't left the signal zone. This is reiterate, reiterate, reiterate. You then did a small toe out. You never departed properly. You'll note up until this point, we had the constriction, and then always, until recently, the sellers then went up when you had a constriction and the buyers drifted away. There was a broadening. Look how far apart it is here. In fact, we use the broadening, how far apart they get, for the sell signals. So pinch means tight market supply. The sellers are being accumulated closely by the buyers. Big stretch means a lot that has to be picked up. Too much selling, not enough big buyers in the market. The insiders know best, which is why it's called the insider indicator. So we're looking on the, so the only new signal, you could argue this one was a new signal, but we never really got apart. So even the two new signals are the original one and then this last one you got here. And that actually is because you never really got away. You never really got away. We never actually parted ways. So this is all one long signal that has to do with that first constriction event there. And that's how you should think about it. Now, because of how we have designed it, we never had such an event before. We never thought that would happen. You're going to have them conjoin and stay together. So it keeps generating signals. I want to remove, I'll do an updated version and I'll remove reiterates. I just want that first signal. So don't say the CoT signal is singled 8 times in a row. It's 8 times stronger than it's ever been. No, it's signaled once and it's never really separated. It's never really, so you've got one signal and that's your long. So we will have any reiterate moved. We're going to put in a condition that they need to be at least a separation to come out of the zone by a reasonable degree before it can generate a fresh signal. So we had no data like this before that, and we never planned for such an event. And that's why these things are dynamic and they must be adjusted. So we actually need to see either the green line come down and the red line go up, or a combination of the both, and have a proper return of the blue line into positive zone, because the green comes down and the red goes up, before we will allow a fresh signal to be generated. So you've had one long CoT signal, and that's how you should treat it. Technically speaking, you can argue a second that came in there. Now, someone else has said, you never gave any shorts. This is not a signal for all to end all signal. Every major move is going to be called. In a macro bull, you're mainly going to get the bull signals until such time as you have a trend changing event where you will next get a sell. The only reason we got a mix of sells and buys before, so let's show you what happened before, is because you were not yet in a trend. You were in a continuation pattern. You were actually getting short-term bull and bear patterns because you were in a macro 2.5 year continuation pattern. Here's where the bull market begins. So typically you're going to get bull calls. There was the first of the new bull market there. And again, there was the third. So to me, you've had 3 signals since the beginning of the break. There, and there. And you've made some money here. It doesn't look like a lot, but actually it is quite a bit, because you're around about sub 40 and you went up to 64. When you get your first major sell, you are either no longer in a bull and going into a continuation like this pattern, or you're potentially even going into a bear market. It's not going to give a sell even on a 55%. It's not selling everything. Did the things change enough? Up top there, what was happening? The sellers were coming down. The sellers were still coming down just before it, and the buyers were flat and mildly coming up. It's not a signal. You got a slight signal, a broadening here for sell, but it wasn't enough to generate a signal. We look for a 70 run. That was quite broad. And it's right that it didn't give that signal, because you were still in a bull run. You would have got out up top here at 38 and watched it go to 64. You would have hated us and not understood. So we look for a run of the 70 before we get that. That is going to imply miners are doing a large amount of selling and very little holding. And we've chosen those values from a history in the continuation pattern. And in the same way I've criticized others' models and said they will fail, so will this one in different circumstances. Because in a new bull trend, it may be that the bear should be triggered at 55. We didn't do any science. We've got very little data on it. It's shown that every time you run a 70, it was a good sell. But as we go from a continuation pattern into a macro bull, it might come earlier at a 55, the next time it runs the 55. So don't expect perfection. Don't expect perfection, and understand that this is one key significant pinch triggering event, and the dynamics of supply have subsequently changed quite a lot. And this is the question of models and dynamics. That's why we use HVF method. It's our primary tool. This Hunt Bitcoin indicator is a supplementary beneficial tool for the current market conditions with the data that we have. That's a long explanatory story, but Bitcoin is looking a little soft, and the dollar is looking strong, and the dollar strength is targeted by us to go to 99 on the Dixie. And if it goes at this rate that it's currently going, crypto is going to face a major headwind. That is a fact. And it isn't Mt. Gox oversupply. It isn't whatever Reuters tells you it is. It's the goddamn dollar. And the fact that America has got to mask its inflation, and it'll do so with currency strength on a tapering narrative that will probably never happen, or happen to a very small degree. But relative to everyone else who's not even talking about raising a rate, reducing stimulus, it means such small sensitive increments, even if they did 0.25%, is going to make a meaningful difference in terms of the attractiveness of the currency. So sensitized we are to interest rate changes due to the excessive debt that every institution holds. It's greatly material, and of course it'll cause a recession if they do anything on a meaningful level. And then they will be back printing a level again, which will crush the dollar, and that will be the next Bitcoin surge, just like it was here. I've now shown you that you had the tailwind, and the technicals gave you the setup, the first cup gold nugget. And that's why we told you this is the most significant and meaningful setup, because you had the support of the dollar when you need it, and you had the strength of it to keep it capped when you needed it. It's a perfect situation of both strength for the one and weakness for the other that gave you such a single-minded move. And to look at one half and not to see the other is folly. And that is the failure of people that base their entire trading strategy on models, just like the CoT model. It will be a failure too if you base everything on it, especially if you think you've just got 8 times the signals, because you've got to reiterate on the first. Okay, hopefully that's clarified a lot of understandings, misunderstandings, and all of that. I'm not a maxi. I don't think maxi is the right thinking. You didn't have one internet company. If you want to block people for mentioning the positive outlook for another coin and nice to be mentioned, you're welcome to. I'm not offended. I don't mind. Models are only that. They're models. The map is never the territory, unfortunately, and they work a bit, and it's useful to have. But in the same way, you must view the CoT indicator. These settings and sensitivities can change. In the same way, interest rate policy of only a fraction of a percent changes when you've added so much debt to the sensitivity of a single currency dominance over everything else, that will see the gold and silver market and the oil market all turn down, and the energy markets turn down. For Americans in dollars, it ain't so bad on the Bitcoin euro. But because the God market of fiat is going up, it's still bad. So whilst the euro is going down against the dollar, if the God market is dominant, it's bad for the anti-fiats. If the God market of fiats is going up, even though the euro is going down, Bitcoin euro will still not look magnificent, because Bitcoin thrives when fiats suffer, and that's the dollar weakness. So it's an important additional point to make. Bitcoin euro, still not a good chart. It still had a tough day today. Still had a tough day, because the sensitivities, the beta of a crypto versus a beta of an FX, if the euro's down 1/3% today, and it's been down significantly for a sustained period, that will mean Bitcoin's down 3% on a day. And that's because of the higher beta. So what's good for fiats is a strong dollar. Eventually, that will no longer be true and there'll be a flippening. And when there's money rushing into the dollar and some of it starts rushing into gold, silver, and Bitcoin, that key event will be told. And we had a sniff of a few days of that. But it's never sustained for lengthy period. The first time you have the lengthy period, we have the macro reset conditions of a real flippening, not a crypto flippening, of a real flippening of the anti-fiat to the dollar. And that is the signal of the eventual irrelevance of the dollar, but not yet. The boss is still the boss. Okay, so much chat. I hope you've enjoyed it. Check it out. To book a call, hit the link below. Book a chat only from our site. We have lots of guys that will put comments in the YouTube. They'll also do it on the crypto. We've got fake everywhere. Book from the chat. It's totally voluntary. We check you out. You check us out. You can have a look at everything. We give you all the details, and you can decide if you want to come on board. But I hope you enjoyed that. And it's the dollar. It ain't Mount Gox.